welcome to the Financial Room. I'm your host, Natasha Bridgmohan, mortgage broker of Mortgage Intelligence and President and CEO of the Bridge Group of Companies. Thank you for joining me today. We're going to be talking about high ratio mortgages. Now, it's very, very important if you're a homeowner, or you are going to be a homeowner, or you're a repeat homeowner, for you to understand what the consequences and the benefits of having a high ratio mortgage. Now, a high ratio mortgage is anyone who's purchasing an owner-occupied home or a vacation home or a secondary home for personal use that is putting down anything less than 20% on their purchase price against the mortgage requirement. So for example, if you're buying a home for $100,000 and you're putting down $20,000 or more, then it's considered a conventional mortgage. So if you're putting down less than $20,000, which is $19,999, you're going to be imposed with insurance premiums. Now, what is high ratio mortgage in very simple terms? Very, very easy. If you put less than 20% down on your purchase price of a mortgage, then you're going to be inclined to be paying insurance premium from anywhere from 1 to 7% plus HST, depending on your qualifications, depending on the amount of your down payment, depending on the mortgage amount, etc., etc. Now, so it's very, very important for you to understand that you have to get qualified and ensure that if you get qualified, you try to put down as 20% down or more to avoid these premiums. Now, these premiums have good benefits and they also have cons. So let's talk about the not so good stuff that you need to know about insurance premium. Well, first and foremost, it's a percentage of the mortgage amount that you're borrowing that you are being charged, and it can be anywhere from 1 to 7% depending again the product that you qualify for. So not only it's a percentage of the mortgage amount, but it's charged and capitalized on your mortgage amount. So what you borrow, you still owe, and you owe more than what you borrow, because then it's amortized against in the mortgage, and you're paying the insurance premium multiple times over and over. So that's very, very, very important. Now, the HST you pay out of your pocket with your lawyer as part of the closing and disbursement fees. Now, you can request to pay your insurance premium up front if you would like, provided that you have the down payment for that. So that's something to take in consideration, and provided that your lender and the insurer is okay with that. Now, who are these insurance companies? Now, these insurance companies, the first one is very popular. Most of you, I'm sure, know CMHC, which is a Canadian Mortgage Housing Corporation, or AIG Insurance, or GE. Those are the three major insurance providers in Canada that insures high ratio mortgage. So it's very, very important for you to understand the purpose of a high ratio mortgage. So it can cost you a lot of money. It's amortized against your mortgage. So as I mentioned, you're paying for it multiple times, and it's taxable implication of HST charges on your closing costs when you refinance or you purchase. Now, one thing that you also have to understand too as well, the benefit side of getting a high ratio mortgage. So if you're a first-time home buyer and you have great credit and you have great income, but you don't have enough down payment because you just started working or you've had other priorities, but you can afford a decent mortgage, getting a high ratio mortgage can be very beneficial for you, especially for first-time home buyers. You can get qualified as low as 95% mortgage, which is as low as 5% down. So if you have 5% down or 20% down or less, those are the benefits of getting a high ratio mortgage. You're not strapped for cash. You can take that money and invest it in purchasing appliances or capital expenditures in your home, like finishing the basement or putting up a fence or getting air conditioning. So high ratio mortgages are beneficial, and they're usually beneficial for first-time home buyers, or also maybe retired individuals who want to keep their liquid money in their bank and just continue paying the mortgage so they have more bang for their buck in terms of long-term spending. So there's many, many different reasons why high ratio mortgages are beneficial. I really encourage you to visit us on any YouTube channel. Just Google the Bridge Group or the Financial Room to view any previous episodes. If you have any questions or concerns, again, we're always here for you to offer our mortgage, credit, and investment services. Toll-free number is 1-866-553-7467, or you can visit us at our website at www.thebridgegroup.ca. Hope you enjoyed today's show. See you next week, Saturday. Take care.